Hey everyone, welcome to The Explainer. Today, we're unpacking a seriously fascinating intersection of cutting-edge tech and macro finance. We're talking about the booming drone economy. More specifically, we're going to look at how the DRNZ ETF offers a really unique, structured strategy for long-term growth in a world that is rapidly shifting toward automated, unmanned systems. It's a huge shift, so let's get right into it. Okay, let's dive into this. Here is our roadmap. First, the booming drone economy. Then, we'll introduce DNZ, unpack its pure play methodology, take a look inside the portfolio, and finally, wrap things up with the advisor's playbook. Part 1. The booming drone economy. Now, you might be wondering just how big this trend actually is. Well, it is absolutely crucial to understand that this isn't just some short-lived tech fad. Actually, scratch that. It's more like a structural integration into the entire global economy. By 2030, the global drone market is projected to exceed a staggering $163 billion. And, when an industry scales to that size, it completely stops being a niche gadget sector. It becomes a core infrastructural pillar, which obviously opens up massive opportunities for strategic capital allocation. So, how exactly do we get to that $163 billion mark? Think about the rapid evolution here. Back in the early 2000s, this technology was incredibly heavy, wildly expensive, and basically confined entirely to military use. But today, the hardware has completely miniaturized, costs have plummeted, and, of course, AI has entered the chat. We're now looking at everyday applications in industrial automation, precision agriculture, logistics, and even passenger drones. It's a totally different landscape. Moving on to Section 2, introducing DRNZ. So, the crucial point is, as this industry really started to mature, the market desperately needed a highly targeted vehicle to capture the growth. Scott Ekishek, the COO over at REX Shares, summed up their approach perfectly. He said, "This should be a pure-play drone ETF, bottom line." They intentionally avoided just throwing together a generic tech fund with a couple of drone stocks sprinkled in. Instead, they wanted pure, undiluted exposure to actual drone manufacturers and the vital enabling technologies that power them. And wow, the market's initial reaction? It's been pretty incredible. In early 2026, the fund actually generated an impressive return of nearly 30% year-to-date. Now, it is a newer fund. Assets under management are sitting around $117 million, with a 0.65% expense ratio. But honestly, those early performance metrics show for sure that this pure play thesis is highly attractive to growth-oriented investors right now. Section 3, a pure play methodology. Okay, so how does DRNZ actually maintain that strict focus? Well, it relies on the Verified Drone Index, which essentially splits the portfolio into two very distinct buckets. 80% is entirely dedicated to pure play companies. To qualify for that, a firm has to derive at least 50% of its revenue straight from drone manufacturing or enabling tech. The remaining 20%, that acts as a diversified bucket, which beautifully captures the established giant companies that have dedicated drone R&D programs. But they didn't stop there. Crucially, the index enforces some really strict allocation caps to actively manage risk. A single pure-play company literally cannot exceed 15% of the fund, and those diversified companies are strictly capped at 5%. This thoughtful design is exactly what ensures you're investing in a true representation of the drone sector, rather than just accidentally buying a mega-cap tech stock in disguise. All right, Part 4, inside the portfolio. So who actually survives that rigorous methodology? Well, it ends up being a highly diverse mix of global players, and this brilliantly illustrates the fund's reach. We have AeroVironment in the US, focused on defense. Then there's Ehang Holdings over in China, pioneering passenger drones. Drone Shield in Australia is handling airspace protection, and Dragonfly in Canada is building out vital unmanned aerial tech. For an advisor or an individual investor trying to access this level of international cross-sector diversification manually, it would be incredibly complex. This wide global spread really reflects the dual-use nature of the technology today. The fund captures literally everything from commercial delivery and precision agriculture, like autonomous crop spraying, all the way to complex infrastructure inspection for power grids. It impartially bridges the gap between AI-enabled industrial automation and military reconnaissance, which gives you this amazing 360-degree view of where the tech is actively deployed right now. Finally, Section 5, the advisor's playbook. Okay, so we've looked at the big macro trends, and we've dug into the micro portfolio mechanics. All of this leads us to the absolute most practical question for financial professionals. Where does a targeted thematic ETF like DRNZ actually fit into a client's portfolio?
Using an ETF wrapper like DRNZ offers some really distinct strategic benefits. First off, it immediately replaces single stock risk with broad global diversification, which is a game changer in a highly volatile market. For advisors, this is basically an ideal satellite allocation. We're talking about carving out a 3 to 5% sleeve in a client's portfolio. When you place it right alongside traditional growth investments, it perfectly captures the massive upside of pure-play innovators while actually tempering the inherent volatility you'd usually see with small-cap equities.
So I'm going to leave you with this final thought to chew on. Is your portfolio prepared for the automated, unmanned future of the $163 billion drone economy? Because this shift from heavy legacy hardware to agile, unmanned systems, it's not a future concept. It is happening globally right now. DRNZ offers a structured, rules-based way to actively participate in that long-term growth. I highly encourage you to research this further and see how it might align with your overall strategy. Thanks so much for joining this explainer today, and keep learning.